Hello and welcome. It's time to take a look at what could drive the markets this week. I'm Kelly O'Byrne and I work on the dealing desk here at LCG, and I'm joined by our senior market analyst, Jasper Lawler. So Jasper, oil, let's see. So it's been falling off a cliff and Brent touched maybe its 10-month lows last week. Obviously, we've been seeing some buyers here on the dealing desk who are obviously trying to catch the lows. Is that the bottom or...?
Well, obviously, I don't have my crystal ball. I don't know if it's the bottom or not, but 10-month lows, that's a big decline in the context of OPEC having made measures to actually, the whole intention of what OPEC was doing was to send the price higher, at least keep it stable. It's obviously utterly failed. And the more the oil price drops, the more people question, what is OPEC? What's the point? They're a cartel. They're supposed to be able to control the price. It's just being shown that they basically can't control the price. Of course, they can introduce more cuts, and if they do, or if they signal that they will, that will support the oil price. But the reason they chose this amount to cut in the first place is because this was the right balance for them in terms of keeping market share as well as edging the price higher. So the more they cut, the more US shale, other producers who aren't part of the OPEC agreement take market share. So they can only cut so far. And so I think that this latest oil price slide, it dramatically increases the chances that OPEC just abandon the whole deal to cut output within the next year or so. And that would send us to sub $30 per barrel, in my opinion. But, while there's still some sort of OPEC efforts out there, I think we're at $45 in Brent at the moment. 42 and change in WTI. These are some quite solid technical levels. So it potentially is the bottom, but there's certainly no evidence of the bottom being carved out yet in the price chart. Yeah.
So from commodity markets, big moves there on to big moves in stock markets as well. So we had the Nasdaq bouncing back last week. That's obviously our US Tech 100 on the LCG platform. So do you think the wobble there is over?
Well, basically the Nasdaq had that dramatic fall and it hit the 50-day moving average like it has a number of times in the past and has bounced nicely. And it's recovered about 50% of those losses. So to me, if you just look at the overall trend, stock markets, particularly technology stocks, are trending higher. So weight of evidence to me suggests that probably this is, the recovery is in place. The risk is that was a dramatic fall, and anyone who missed out on that fall are looking for a nice spot to rejoin any further extension of that fall. So we're at about a 61.8% retracement of the fall at the moment. So between that 50 and 61 level, so I'd say somewhere between where the decline took out the lows on the chart and the highs, there's a risk that we see another sell-off there. And I think that would make sense because there's obviously going to be more balance in the market after that decline. Some of it depends on not just technology stocks, but how other sectors are performing. And so I think part of why the Nasdaq did well last week was because the oil sector was doing so badly. Okay. So that weighed on the Dow and the S&P. There's not such a big oil component in the Nasdaq, so people went back into tech. If oil recovers, oil names recover, people jump back into more like the Dow and the S&P, Nasdaq relatively underperforms, that's when the tech stocks could unravel again. So maybe that's a layer of thinking to look into it.
Okay. So what about European indices, the FTSE? We call that, again, the UK 100 on our platform. So that seems like it's faring the worst at the moment.
Yes. So we're going to put up a chart for viewers to look at now. Yeah. And it shows the FTSE 100 relative to the Euro Stoxx 600. So obviously the biggest 100 stocks in the UK versus the biggest 600 stocks in Europe. And there's a dramatic underperformance for most of the year. And then in and around when the election was called, the FTSE started to outperform again. Obviously always partly relates to the pound, but also a bit more optimism that maybe a big Conservative government would take the stock market in a better direction. That's unwound now. And so now we're at the lowest levels in this spread between these two indices since the election result. And Also in the FTSE 100 chart, I mentioned in a snapshot video, I mentioned on Twitter as well, that there's potentially head and shoulders pattern forming at the moment. So if we take out the neckline of that head and shoulders pattern, technically that opens up quite distinctly lower prices in the FTSE.
Right. Okay. And on to everyone's favourite topic, Brexit or not.
Yeah, or not, yeah.
So it's 1 year on. How do you see things stacking up there?
Yeah, so it's 1 year later, and we're only just beginning the negotiation process, which is obviously quite crazy. But so far, the tendency has been for the UK to be making some concessions to Europe. So Theresa May just offered to keep around 3 million European citizens in the UK as long as they lived over 5 years. There's obviously going to be some to and froing on that time frame, how workable that becomes. So that's obviously on condition that the same happens for UK citizens abroad in Europe. So there's some sort of concession. Also, the fact that they're just going to be discussing divorce, basically how much the UK is going to pay the EU before they talk about trade. Seems like the UK is softening its negotiating stance a bit. Maybe that lends us to believe that they soften their overall approach. And so I think markets appreciate that. But obviously it's just very early days. And the economy and the stock market have weathered the result pretty well a year later. But obviously now we're in the negotiations, it's a whole different ballgame.
Yeah, of course. So staying with the pound, is it me or is the Bank of England struggling a little bit?
Yeah, absolutely. I mean, we're obviously talking about Brexit, but yeah. I think, the biggest influence has shifted slightly at the moment from Brexit to the Bank of England, because it does seem like there's some disunity, as it were, as you said in there. We obviously had the rate set meeting where there was 3 dissenters. We talked about that previously. Following that, I alluded to in last week's video that probably Mark Carney was going to come out and try and soften the blow of that a little bit. That's exactly what he did. But then what I wasn't expecting is that the chief economist, Andy Haldane, just a day later, comes out and says, but actually he's expecting to start voting for a rate rise quite soon. So the question I was asking is, well, do the MPC policymakers fall in line behind dovish Carney, or do they start, building on the momentum of those 3 dissenters? Christine Forbes, one of the dissenters, is leaving. More dovish members coming in, but sounds like Andy Haldane maybe takes her place as a dissenter. Who else does? So suddenly we could be looking at, at the moment it's 5-3 in favour of keeping them on hold. It only needs to tilt slightly. Suddenly we're looking at a rate rise. So, I think that underpins our generally kind of bullish view on the pound in the medium term. Okay.
And talking economic data, it's a quiet week this week for Europe. But US data, there are a few things on the cards?
Yeah, I think so, yeah. So going to show a chart of the US dollar index. And it's always good to kind of look at the dollar index in the back of your mind, particularly on the longer term, for how you're playing the currency pairs if you are trading Forex, because obviously it's the most dominant currency. And it's been very soft since the start of the year. But there's been a bit of a bounce. So the data next week into the Q1 GDP, consumer confidence, durable goods, will all play into whether this kind of slight recovery in the dollar that we're seeing continues.
Of course. Thanks, Jasper, and thank you all for watching. Don't forget to follow us on social media where you can get all of the latest analysis as it's released. Also, including Jasper's daily snapshot videos. Thank you for watching and best of luck trading.